Hello and welcome to Big John's Thoughts on the Market for August of 2016. We're seeing that there's continued sluggishness in the overall economy in Alberta, and that's having a direct impact on the Calgary and area real estate market as well, with poor economic performance and continued poor job performance, increased unemployment. It is really weighing heavy on the demand side of the equation in our real estate market and causing continued sort of softening downward pressure on prices. What we're seeing is that combination of when people either don't have an income or they're concerned about their future job prospects, the likelihood of people going out making a major purchase just isn't a reality. Now, we are seeing some bright spots, so it's not all negative. So let's take a look at some of these numbers. The absorption rate for overall in Calgary is sitting at about 3.2 months worth of supply in the market. If you remember from previous discussions that we've had, anything between 2 and 3.5 months worth of supply is considered a balanced market. So that number is creeping up and we are getting almost into a general buyer's market condition. Single family homes, though, is a bright spot in this marketplace. We're seeing that it's sitting at about 2.5 months worth of supply in the marketplace. So what we're seeing is that if you have a home under 500,000, we're seeing a lot of activity in that market. As the price ranges increase, we are seeing that there is a little bit less buyer activity, less activity in that market segment. The attached homes, we're seeing about 3.7 months worth of supply in the market, so that is officially shifted over into a buyer's market. And apartment condominiums, that's where we're seeing the biggest supply numbers in the marketplace, over 6 months worth of supply in the market. So what we're seeing is a lot of downward pressure in the condominium apartment marketplace. But if you are a first-time home buyer, investor looking to downsize, there are a lot of really good buying opportunities in that apartment condominium marketplace. The sales to new listing ratios is the other sort of set of numbers that we really want to keep an eye on. And when we take a look at that, we see that the sales to new listings for Calgary in general is about 0.65 of a sale for every new listing. We like to definitely see that number above 6 and or 0.6, and the closer to 0.7 that sales number gets, the better. With detached homes, we see that number is actually 0.74 sales for every new listing. So that's why you see the absorption rate is lower at 2.5 months worth of supply on the market, because for every new listing coming on, we are seeing that 0.74 of a sale. The attached homes, we're seeing about 0.66. And again, with apartment style condominiums, it's about 0.4 of a sale. Anytime that's new sales to new listing ratio gets below 0.6, you start to see an increase in inventory, downward pressure on prices, and some great buying opportunities. Overall sales this past July were down about 12% from last year, but we've also seen that the new listings were down about 10% as well. So the good thing in this market is that the supply numbers are decreasing as the sales numbers are decreasing as well. Overall inventory is up about 10-11% from a year ago, but not unexpected. We've just come through now the 20th consecutive month for downward pressure on prices and month versus month sales. So again, we are seeing that there is definite downward pressure on our real estate market with a few bright spots in there. Now, how do you take advantage of this? How do you profit from this or achieve your real estate goals? Well, what we're seeing right now is a lot of first-time home buyers are going, geez, I can buy a home now cheaper than I'm paying rent. And with those starter markets, there's a lot of inventory, especially if you're looking at maybe an apartment style condominium to start off your first purchase. Also investors looking to purchase into that condo market. A lot of opportunity, a lot of decreases in prices, and a lot of inventory to look at, combined with really good interest rates out there in the market. Also, if people are looking to move up in this market, there's a lot of opportunities there as well. Because if you take a look at it and you have a $400,000 or $500,000 home, that marketplace is moving rather quickly. And if you're looking at, say, moving to $700,000 or $800,000 home, those homes have taken a bigger price adjustment over the last year to 2 years. So the actual difference between your home and that larger home that you've had your eye on, actually probably that gap has been significantly reduced, meaning that it's a great time for you to go ahead and maybe take a look at making that move up. And then there's also people that are looking at the economic conditions and are either forced to maybe make a move, or they're looking at the future and saying, geez, maybe we should make some sort of a preemptive move so that we don't get ourselves into trouble down the road. So we are seeing some people in those conditions as well. Again, as always, I really encourage you, please take the time to plan out what you're going to do, what your goals are. That's what our team is here for. Sit down, talk to you about what you're wanting to accomplish, then putting a plan in place to accomplish those goals for you. Because again, in this marketplace, planning is absolutely imperative. It's key that you do it, and that's how you're going to ensure that you're going to have a successful real estate move. Please let us know if you have any questions or concerns, and if you'd like to discuss or give us any feedback on these monthly videos, I'd really appreciate it as well. Have a great day.